December 1st. Now, on paper, that sounds like it should be a really good thing, right? The market should go up. Ending QT means we stop draining liquidity, right? But psychologically, investors don't interpret it that way. Investors look at an early end to the QT as if something somewhere in the financial system might be struggling, right? Now, the Fed tells us, guys, don't worry, nothing's wrong, there's no cracks in the system, we're just doing this earlier because we want to make sure we're ahead of the curve and we don't cause a recession. But investors are like, yeah, I don't believe you. It looks like a sign that maybe somewhere we are hitting a stress point. Like, have you seen the jobs report lately? Not looking good. Have you seen the AI valuations? Not looking good. So every time in history, when liquidity stress shows up, risk assets don't like it. So this theory says that Bitcoin didn't go down because of some magic line that's drawn on a chart somewhere. It went down because Bitcoin happens to be what people say is the canary in the coal mine. It's the first one to be affected because it is the easiest thing to sell. So it reacts first. So there's a possibility that the stress signal shows up in Bitcoin before it shows up in the rest of the market, which means the rest of the market could eventually follow. So that is one of the macro theories. I'll probably put you to sleep if I told you about the other ones, but just briefly mentioning them, other theories for why Bitcoin is going down is Bitcoin is having its IPO moment, right? Early investors are selling it because it's the first time they can sell without crashing the market. And there's people among us that have billions of dollars in Bitcoin alone. They're finally exiting those positions. There's even a theory about Bitcoin's core dev team changing something called the op return limit, thus changing the entire meaning of Bitcoin's existence from being money to being a data transfer protocol. But I'm not going to bore you with that unless you want me to. Let me know down in the comments. All right, so if you made it this far into the video, not that it should matter, but here's what I'm personally doing. If I was the trading type who's trying to time the market, I'd be paying very close attention to what's happening. But I'm not the trading type, so luckily for me, hopefully I still have at least another 20 to 30 years before I retire. So regardless of what ends up happening in the next few months or the next few years, hopefully it's not going to make that much of a difference, but that's just me.